Let's focus on the Edelweiss ET Now lead indicator index, which is out for the third quarter, and the reading has come in at 99 against a reading of 104 in the previous quarter. So let's try and understand this better. The author of that report, Nishchal Maheshwari, joins us on the show. He's EVP Research at Edelweiss Securities. Now, Nishchal, to begin with, the reading for the December quarter, like we just mentioned, has come in at 99, which is down from the 104 reading in the second quarter. Can we take this as an indication that non-agricultural GDP growth in the third quarter, when that official number does come in, could actually come in lower?
Not really, actually, George. This is more or less moving in a range. If you really look at it for the last now for 2-3 quarters, actually it has been moving in sort of a range from around 95 to 105. So it's not going to be very clearly lower than the last quarter, but it's going to be the same kind of a range. What it's really indicating to us is that obviously there is disappointment, and the bottoming out is taking much longer than what most of the market or most of us would have expected it to happen. So I think that is what the message is coming out, that the third quarter is also not indicating that the economy is on a strong foot. It is sort of a bottoming out process as yet.
Nishchal, now the Edelweiss ET Now lead indicator has been moving within a range of about 95 to 105 for some quarters now, pointing to a prolonged bottoming out of economic activity. How long before we see it break past that 105 level?
I think we were expecting this quarter to be much stronger, and are expecting a rate cut kind of a scenario. I believe now that gets shifted to the next quarter. So I think post that we should start looking once again some positive outlook happening out there. Simultaneously, we have seen that some kind of semblance has come the world over. So I think the export side also will start looking okay. So I think post the next quarter, so post or the first quarter of FY14, you are going to start looking at this number breaking out of 105.
But also, Nishchal, what would you make of the weak data on cement dispatches? Because only a few months ago we were talking about how encouraging the strong pickup in cement dispatches were looking.
See, this is the lead. It's a data basically which we use for a couple of quarters back actually, and that time in anticipation of a monsoon. Basically the data was the dispatches were lower, and that is what is reflecting here. But as the news is or as fact is basically that there was a monsoon and the cement dispatches were much better than expectation. I think those numbers are going to do a bit of catch up.
Nishchal, it's just not macros, but it's a lot of politics as well that impacts the markets. And we, of course, had the winter session that was kicked off yesterday, and today the second session, of course, has also been suspended. The Parliament will reconvene now on Monday. How are you expecting the winter session really to pan out? Do you think we will be seeing any concrete decisions being taken up, possibly on insurance, on multi-brand retail, or will the session probably fizzle out?
A couple of things basically. So what was the market expecting, and what has not got, and what will actually happen, that's what we believe. Market is expecting 2 or 3 things actually which really impact the market. One is peaceful passing through of the FDI on retail. The second thing they are expecting is a land acquisition bill to be taken up and passed through. I think the third one is pension and the insurance. Now pension, they are expecting that the FDI will be opened up and maybe opened up to 26%, and in case of insurance from 26 to 51. On all these 4 bills, I believe retail FDI will be after a discussion, it will be just passed through. There will be no voting on that, because I believe Congress has got the numbers on its side, and it's not allow voting on a retail FDI, voting on is an executive decision. So I think that is as per what market. That's why you saw some amount of pullback in the markets yesterday. Land acquisition bill, if the Parliament actually works, I think it will be passed through.
In addition to that, Nishal, just give us a sense of what you're making of the equity markets at this point in time. It's been very, very quiet and very tepid as far as, the benchmarks have been concerned, though we are seeing some spurts come out as far as the mid-cap and the broader markets are concerned. What's your outlook for the Indian markets then at present?
I think we have been holding on to this view that buy on dips. And I think that is where we had come out a report on, I think, 5,800, and it is 5,600, so it's definitely a time for buying. I continue to maintain that because I see these are all small disruptions. The actual numbers on the ground are going to be still there. Corporates have been delivering results, so if you look at on the Sensex earnings, for the current year, it is going to be around 1,225 rupees. That's what we believe is going to end up with. And 12 to 13% kind of a growth we are expecting for FY14 earnings on FY13. That will mean that it will end up with somewhere close to around 1,400 rupees for the Sensex. Now, if I give around 14 or 15 times multiple, which is a long-term last 10-year average, I think the target remains to be around 21,000 for the Sensex. I believe every opportunity should be looked at as a buying opportunity because that's, at least for the broader market itself, I believe there is a 10 to 12% upside.
Right. Nishal, the other big factor that, the markets are also waiting to see is what sort of developments we see from the Reserve Bank as well on the interest rate front, because, the inflation levels really aren't coming down. The numbers for October were just about marginally below what was expected. As long as inflation remains above this 7% mark, do you think we will see any activity on the rates front from the Reserve Bank?
I think it's a very, very difficult task for the Reserve Bank basically to tread a very, very cautious path between growth and inflation. But fortunately for them, I think the core inflation which now they have been focusing on, actually that has started coming down once again back. Food inflation has been more or less contained, and the fuel inflation has not been as strong as people were expecting, given that we had taken a price hike. So I think